Time now to welcome on board Mr. Suresh Kumar. He's, of course, the Managing Director at Allcargo Terminals to talk to us about their earnings and the way forward. Hi, good to be speaking with you, Suresh. Just wanted to begin by understanding this quarter. It was broadly in line with expectation. The volume growth came in at around 9%. Going forward, is there a potential of a further increase in the volume growth? Because, of course, earlier it's been challenged by a lot of global and domestic issues. But are things looking up now?
Good afternoon. Thank you, Anisha, for having me on your program. Yes, it's been a growth-filled quarter for us at Allcargo Terminals. 9% growth, by which we outpace the market. This is growth largely led by imports. And if you were to look at the numbers that we have been reporting over the last 5-6 months, the trajectory has been upward and it continues in Q1. We expect this momentum to continue. We also would like to see exports starting to play a larger role, given the thrust around manufacturing. That will add on to the volume. So we remain optimistic that these volume numbers will continue in this trend.
Would you say by end of the year, the exit rate would be well in, teen double digits for your volume? At least the exit rate, if not for the full year?
Yeah, if the current trends point to that, and if we were to look at how we have performed in Q4 of last year and Q1, and even now as we speak, we have the July month completed, which also has recorded strong numbers.
Teens volumes is what one could expect. Strong numbers coming in on the volume growth front. Good afternoon, Mr. Kumar. This is Vinny joining in the conversation as well. So obviously volume growth, operating efficiencies, that's something that has aided and supported the EBITDA performance, the margins over there. What is it that one could be watching out for as an overall outlook if volumes are expected to see an improvement coming in? What is it for FY25 in terms of margins that we're keeping an eye out on as a target?
So at ATL, and we are largely optimistic on the future for a multiple set of reasons. One, the continued thrust, even in the latest budget, on the manufacturing sector, the enabling government policies around logistics, starting with the PM Gati Shakti policy, the national logistics policies, all of them set the overall macro picture very right for logistics and supply chain organizations like us to kind of contribute strongly to the economy. Coming to us, our strong pan-India presence, we are present in ports which contribute to about 80% of India's EXIM trade. We have strong customer equity for the brand Allcargo. Our initiatives in digital and transformative changes over the last 2 to 3 quarters, which have been well accepted, including the MyCFS portal, which now has the capability of handling almost 2/3 of the entire EXIM process. I think all these are contributing to our optimism. Added to that is the fact that imports have started looking up over the last couple of quarters. And we definitely believe that with the government thrust on exports and manufacturing in India, we would also see the export numbers picking up. That's what our optimism is based on.
Yeah, so exports is definitely something that you're watching out for. But I do understand that you're looking at acquisition of opportunities. And you just mentioned those Gati Shakti cargo terminals as well. Could you talk to me about what's the scale, size, which areas, what's the overall quantum that you're looking at with respect to the acquisition opportunities?
Yeah. So if you were to look at it, currently we have our CFS facilities in ports which contribute to about 80% of India's EXIM trade. We are focused, like every strong logistics entity, on the opportunities that the DFC presents. So there are a set of stations that we have identified where we would like to participate when the tenders for them for the GCT opens up. Apart from that, we ourselves have started work on the ICD at Jajjar Farooq Nagar, which in FY26 we plan to commission. So that is another thing that we are doing, which is also linked to the DFCC and the export and the manufacturing industries that we've been talking about. So this is what our plans are around DFCC, around GCT. We would continue to add capacity in the territories, in the geographies that we are already present. In the last 2 quarters, we are planning to add capacity in Mundra. We have acquired some land parcel there. We are also in talks for adding capacity in the growing market of Chennai, where there are 2 sets of port clusters. We are adding capacity through a strategic partnership there. So as we see, when we build our volumes, we also would like to build our capacity. We currently run at about 85% capacity utilization, and we would like to add another 10 to 15% capacity through the measures that I indicated in the coming quarters.
At 85% capacity utilization, and you're looking at actively increasing the capacity as well. Thanks, Suresh, for making time and speaking with us. So that's the commentary coming in. They are definitely quite excited about the export potential given the manufacturing uptick that we have seen, and that is what drives their confidence of a recovery.
If you like this video, then like, share and subscribe to ET Now.